I recommended this book, Becoming Your Own Banker, R. Nelson, whatever. And I'm like, okay, I'm starting. I still don't completely get it, but I'm starting to get it. And some of his examples are just incredible. Like, so I'm working on a baseline to understand that, but it seems like that's worth pursuing as well. Like, I'm kind of at early 50s. If I don't do it now, I'm probably, going to be too old. But you can also, one of his examples was amazing. Like, you could buy a whole life policy for, this is what was recommendation, like grandparents can buy a whole life policy for their grandchildren when they're born, right? Yep. In his example, the book is from 2009, right? Pay $2,000 a year for, it's like 20 or 22 years. I think it was 22 years. So the total cost is $44,000. And then what that generates then for them by the time they're 70 is mind boggling. Like, from a $44,000 investment, it's worth millions once they're 70. Millions.
Wow.
Like, you have a million. So basically, he's saying that at 70, if they want to take $145,000 out of the policy every year, they can do it until they die, right? And they will still have like $1 million or more in death benefit to then leave to their children. And that's from a $44,000 investment. It just happens very early in their life, right? So the 44,000 is fully paid by the time they're 22. So that's 48 years until they're 70.
And it's all compound interest.
Imagining that yet there's dividend paying and reinvest. And then it gets even better because they have access to the policy. They can borrow from their own policy. You can borrow from, this is the infinite banking concept, which still I'm not quite there. I can't, articulate the tables clearly enough, but, whatever you're borrowing for, right? You want to get a car, right? You want to borrow for the car. You can borrow the money from your own policy, right? So, and that actually juices your policy even more.
Yeah.
Because you would be paying that interest to someone else. So why not borrow it from yourself, right? And then it goes back into the policy. It's not exactly interest you're paying to yourself, but it is increasing payments into the policy.
We borrowed, so Cindy has this 401k that we've used as a piggy bank for a while, right? So we'll borrow 40 or 50,000. We're paying 9% interest to that, but we're taking this money and we're putting it in other places that's also making money. It's very much
all like arbitrage. Yes, they're all like these arbitrage plays, which is one of the things that real estate investors think about. That's been my best skill, is to try to do arbitrage. So if I can, think through more effective arbitrage structures, with the available cash that I have, maybe I can, even increase the cash flow or the gain over time in terms of value of the investments greater to a higher degree than what I'm thinking at the moment. Maybe there's a way to do that. So this is part of what I'm spending my time doing. It's like, it seems like, for my needs, probably need to have about 2 million of capital to be able to work with. And then that should be kind of the right point. I think for some people, like, where you're at, if you had, look, if you had $1 million and you could get 15%, that would easily satisfy all of your expenses, right? So I'm kind of thinking it's, I probably need closer to 2, but, I'll have something that I can work with. And so this is part of what I'm spending my time on, trying to kind of figure this out as some capital is coming in and I can diversify it. And, hopefully then I'm not as stressed out just on these individual projects, and I can find something that's more appropriate to work on. So
it took me 2.5 years. Like, we got into Raise Masters about the same time, right?
Yeah, nearly exactly the same.
23.
Right.
So it's been 2.5 years, and I just calculated it yesterday. Cindy wanted to know, like, where are we at? I just calculated it yesterday. In the next 12 months, I'll make $1.5 million. Like, that is, it took me 2.5 years to get here,
right?
But I'll make $1.5 million. I'll not after taxes, but $1.5 million net after 2.5 years. Like, that's what's basically we can, and that's the rest of our lives. We won't have to work again. We'll have enough cash,
right?
And I'm dumping it all into some kind of recurring revenue.
Yes, yeah, exactly. So it's the same kind of thinking. So maybe you want to look at the whole life also. I don't know. You're a couple years older than I am, but you could still do it. There's ways that you can do it.
A friend of mine's doing the infinite banking right now. If you want,
that's what it is. It's all through whole structuring. So there's this guy that I've been talking to that contacted me through LinkedIn. He works for Guardian Life. It's a big company. I mean, they actually even have offices here. He's like out in the Midwest somewhere, and they write policies through only, A plus whole life insurers. So he sent me some tables, but still I'm trying to understand like what is the best structure policy to get, and then how can I fund it over time and then get it to work in the best way for me. This is what I'm still like. I was listening to the Nash book. I got the audio book and I listened to the whole thing. I'm like, where are the tables? Like, because I bought the actual book because it has the tables in it. I needed to see it, and like I need to see, like, I think I'm like sick. I get the concept completely, but I'm not fully understanding the math on the tables in terms of how the money accrues, how you're paying it back, and what the levers are, basically. How much you need to overfund to increase the cash value, and then how you can utilize that cash value and how that flows over time. If you really, to utilize it most successfully, you really need to understand the mechanics of it in detail, and then you can get it to work. So that's just like my project over the next month to figure this out, because it seems like I should definitely do it, and then maybe even buy policies for my kids with a low funding amount.
14 and 16, they're going to be
right. I mean, they're not just born, but still, like at 14, if it's 20 years, she'll be 34. And then there would be a significant cash value that she could take loans from. So I'm trying to think through what these options are, and then also try to look for some other projects, get out of these projects, and de-stress my life. Like, I'm feeling, as you probably are, like age is catching up with me, and I really don't like it very much, I have to say. I don't know how you're feeling about it, but I'm like, why am I not running as fast? Why am I, like, what's going on? I was at the Botanic Garden the other day, like staring at the sky, right? It had rain. It was like a nice sunset going on. And the sky got very blue, and I'm starting to see like some threads in one of my eyeballs, and I'm looking it up, and it's like, that's age related.
Yeah.
Like, it wasn't terrible, but when I looked it up, it said if you're looking at a solid color, particularly a blue sky, it's easier to see it. Like right now, I don't see it, right? But it's like, it's an age-related affectation that happens, like some detachment in the back of your eyeball. And I'm like, God, like, all these things. And like, what is it just going to get worse from here? Like, I need to take more time, and it just takes more time. Like, I will go to the gym every day, but I'm not getting up at 4 a.m. and getting to the gym at 4:30 and like working out for an hour, and then at my desk at 7 and working 12 hours. Like, I can't do that day after day.